Alright guys, welcome back. In this video we're going to be talking about something that's rarely covered online, and there's been tons and tons of questions searching for the answers to this, and there's a lot of grey area around it. So I've been doing a bit of research and looking around, and I've figured out that actually there's not a lot of information available around in one place on this, and it's something that I had to have various meetings over with accountants and solicitors and brokers to get to the bottom of when I started out. So I thought what I'm going to do is put together a video where we're going to talk about tax on trading. Now this video isn't tax advice or financial advice, but there's lots of kind of fluff out there and lots of kind of hearsay and Chinese whispers and grey areas when it comes to tax on trading. You might have heard things like there's a spread betting account and a CFD account, and what are the differences? One's tax-free, and then you might have heard, well actually it's only tax-free as long as the account size is under 100 grand and you've got another primary income of around 15 to 17 grand. And whilst all of those have some partial truth, it's not actually set in stone. You know, really the whole limit on the account and the primary income is basically so that when the Inland Revenue or your tax authority investigates you, you're not seen as having trading as your primary income source, when really you're trying to say that it isn't your primary income source, because everyone's kind of assessed on an individual basis. And because there's so many different tax laws and so many different rates, and there's different people in different countries, and I know spread betting is allowed in the UK but not in other countries, what I thought I'd do is, instead of me telling you about what I've done, what I'm going to do, because I'm just one individual, what I'm going to do is I'm going to go out and I'm going to meet one of the most respected brokers that I've got a relationship with, and I'm going to give you his insights on the difference between spread betting and CFD accounts and all of the kind of loopholes and misconceptions and things like that, and things to look out for. And then I'm going to meet up with a very, very well-trusted accountant who I've known for 20 years, and I'm going to give you all of the insights from a tax perspective and what the Inland Revenue or the tax authority might look at and view you as, depending on what approach you take. So we're going to be covering limited companies, sole trader, spread betting, CFDs. We're going to be covering capital gains tax and all that kind of stuff, and we're going to give it to you all in this one video. So you're in for a treat. It's going to be a proper immersive video, so get a pen and take notes. I'm also going to be talking about how to structure accounts as a business if you're going to take this professional, and you're going to get every piece of information that you need to then go out and really approach with a level-headed mind and have the best chance of success in your own trading business. So enjoy.
Hi, I'm Stuart Lane. I've been working in the spread betting industry for over 30 years. Started many years ago at City Index. Been part of this crazy industry for what feels like an age. Been working at Core Spreads now for 5 years. We offer a spread betting and CFD trading service, mostly focusing on spread betting. I've always been passionate about delivering service to clients. I know it's an easy throwaway comment, and you know, lots of people will say that, but it's always been very much at the heart of everything that I would like to do, and something that we instill in everybody that works here. There's a lot of people out there had bad experiences of this industry. We've seen the regulator become quite active in this space over the last few years, and mainly because of the reasons that clients have had bad experiences. There's been some poor practice out there, and yeah, it's always difficult to change the world, but I like to think that we're doing it step by step. Those that have been using high leverage over the years are always going to be looking for those higher leverage opportunities, but for me, lower leverage shouldn't be something that we are frightened of. It's something that should be embraced. Ultimately, the leverage caps were put in place for a reason. ESMA looked at the effect of having those leverage caps in place and what that meant for clients, and ultimately it leads to better money management, leads to people making less rash decisions, and chasing money. So yeah, I don't think it's a bad thing at all. There'll always be higher leverage options for people should they wish to seek them out. But for me, lower leverage, particularly for people that are starting out, is not a bad thing at all.
No.
You've got to remember, lots of people out there have never ever used leverage before. So if you said to somebody you can get 30 to 1 or 20 to 1, they would look at you and they've only ever traded physical, maybe only ever bought shares, where you're putting up the whole amount. So to be able to leverage yourself to that sort of extent is still it's a good amount of leverage, and needs to be respected and understood. This is not a product that you can just sit there and go, oh, well, it's only 30 to 1. You can still get yourself into a lot of trouble with that. So let's break it down. CFD, contract for difference, and spread betting. So when it comes to how you trade, a spread bet is placed in pounds per point, whereas a CFD will often be placed in lots. But ultimately what it comes down to is how your P&L is realised, how you actually make money or lose money. So a contract for difference, when you're trading a market, you're trading in the market is denominated in different currencies. So for example, if you're trading the Dow is denominated in dollars. So you'll be trading in the underlying markets, you'll be trading in US dollars. So a contract for difference, you're trading in the underlying currency of the market, whereas a spread bet, you're trading in sterling. So when you're betting on the Dow, you're betting in pounds per point as opposed to dollars per point when you're trading a CFD. Now, spread betting under UK law is tax-free, free of capital gains tax. Whereas contract for difference is not, it's trading, and therefore subject to capital gains should you make a profit. So that's the main difference of the two. Interesting how perceptions are about these products. Spread betting was always considered to be, oh, that's gambling, it's not investing, that's gambling. I'm not a gambler, I'm an investor. Whereas CFDs was considered more the product for those that wanted to invest into the market. To be brutally honest, there's so little difference between the two products now. When I first started, there used to be some differences where contracts would expire on spread bets, CFDs wouldn't. Now it's all changed. Spread bets and CFDs, there's so very little difference. Ultimately it all comes down to your tax. So yeah, important to remember that side of things. So for us, we prefer that style of trading from a point of view of it's easy to understand. If you're trading the DAX and you're trading in a CFD, your profit or loss is in euros. Well, you've then got to transfer that back into sterling, so you've got an extra leg, if you like, of a trade to get yourself back into the currency that we all have in our bank accounts. So for us, we find it's far easier to explain, certainly for people that are just starting out. And when you talk about pounds per point, okay, so I want to bet £1 per point move of that market. It's an easier conversation to have, an easier thing to explain, rather than going, okay, so you're going to trade one lot of euro dollar, which is equivalent to $10 a tick, and suddenly it all starts to become quite complicated. So spread betting for us, certainly for people that are starting out, we found it an easier product to explain. No limitations as such. It's an interesting subject. It depends. Excuse me. It depends how you're using the product and whether you're considered yourself as a professional trader. Is this your only income? There's been a lot of talk in the market as to what would happen with the HMRC if they looked at you and said, okay, you are working in the city perhaps, making a reasonable income, let's say £30,000 a year, but you are making an extra £20,000 or £30,000 from spread betting. How is that taxed? Well, ultimately, if they were ever to try and put income tax on that, what would they do about losses? Would they allow you to offset your income tax? And this is why, when you consider, unfortunately, when you look at the statistics, and on all the spread betting websites now, there is the warnings about the percentage of clients that lose money. That really says it all as to why HMRC are never likely to want to put income tax on there, because the offset for them would become very, very expensive. Same can be said about capital gains tax. Capital gains tax taxable on CFDs, not on spread bet, but on CFDs your losses can offset other gains, but on spread bets you can't. Again, when I first started in the market back in the 80s, late 80s, we used to have the tax office come round and speak to us and we used to take out the list of clients and show them their profit and loss, and then they used to go away because they knew by putting capital gains tax on this product back then, they would have ended up with a lot of claims for the offset on gains made elsewhere. We're not tax experts, far from it, and so we don't provide advice. We are an execution venue, so that means that we are here to provide a platform, access to the financial markets, but we've got to be careful and we don't get involved in direct tax advice. This is where we like to tell people to go and speak to their own tax advisors. It's very important, and they will understand your own personal circumstances, because everyone's circumstances are different in terms of income, in terms of what you're doing for a living, but there are a few areas of this market that are still under discussion. But as I say, the tax authorities have never moved, and there's been a few occasions in the past where I've known some very big winners who have had visits from the revenue, but it's never gone any further, because again, I think the issue that they've got is how do you offset income tax if you start making losses? That's not something they're going to be very keen to allow. There's always horror stories in this market, I'm afraid. I think it comes back to when you're starting out to trade, having realistic goals. For me, it's the biggest mistake is people not having realistic goals. Having £2,000 or £3,000 to put into an account and expecting to make 10, 20,000. Think about that for a minute in terms of percentage return. The best, the best fund manager in the UK is probably 25, maybe 30% return. So let's break that down. So on that basis, £3,000 in there, that's 900 quid. That's a good return. But it's just unrealistic. People, I think, come in with unrealistic goals, and I think those horror stories are born out of that, to be honest with you. People put in money, chase it, and the higher leverage, if you look back historically, has been part and parcel of some of the problems that people have faced. There've been occasions where professional traders have found themselves in court, but that was trading through CFDs rather than spread bets, so slightly different, and that was around an income tax claim that was made by HMRC against somebody who used to trade for one of the bigger brokers. Again, it was never proven, but yeah, that was an expensive court case, lots of expert witnesses being called. It was the revenue contending that it was income tax that should have been payable on the monies made, because he was a professional trader trading CFDs. So I think it's one of those that whenever revenue see big numbers, they always think, oh, we'll mind a slice of that, and they chase that pretty hard. I think if you're talking about setting up as a business, first and foremost, before you even open an account, before you even decide how you want to trade, who you want to trade with, go and see somebody and speak to a tax advisor. Get some really good professional advice here. Get somebody who understands your personal circumstances. So I'd go to someone local, someone that you know, preferably, and speak to them about what you have in terms of your income, set it all out and explain to them what you're trying to do. If you're looking to set up a business, what allowances do you have? You're going to have screens, you're going to have computers, you're going to have maybe access to feeds. You might be looking to get a charting package. These are not cheap things to have and to pay for. So yeah, all of these things in the same way with any small business. Think of it in that way, that you're setting up a small business and how you want this to look. From your point of view, how much you want to be spending on that infrastructure you want to put in place, and how much you can offset of that when you come to do your tax return. But it's important that you do go and speak to somebody. Don't go into this just blindly and think, well, it's okay, I'll just put it down as other income on your tax return. That's when you'll get questions. Always make sure that you've got everything. And when you do start trading, keep all your statements, keep all of your records. So important to make sure that you can show a trail. Money in, money out. With this type of trading, particularly if you're day trading, you can be pushing money in and out of accounts quite frequently. With everything these days, AML, everything like that, it's important that you can show the trail of money, why you're putting money in, why you're taking it out, and just keep records, keep good accounting records. This product has been marketed, in my view, in a poor way, quite often misleading way, and I think that clients have embarked on a trading experience or trading business without really fully appreciating and understanding the market and understanding what it can do. I'm a big believer that education, people learn in different ways. People have very different ways to learn, very different approaches to that, and you will connect and engage with certain teachers. You will resonate to some methods of teaching. But what it comes down to for me is that it's how you manage your emotions once you're into a trade. And that's not something I think that people realise until you're actually into a trade. Once you're in it, it's how do you cope. There are certain circumstances in life, we call it fight or flight, and I think until you really understand you as a person, you've got to start from that point, because once you get into a trade and you start seeing that real money, not demo money means nothing to anybody. These demo accounts for me they're a good place to come and understand and learn how the platform works. They're not a good place to learn how to trade, because ultimately you have no emotion. It's very, very easy to sit there and watch a position go to a loss of £3,000, £4,000, £5,000 because it's not real. The moment you're actually invested in that and you've got some skin in the game, as they call it, your emotions change. So I think, going back to your question, yes, there are lots of people interested. I think that there is a big piece that this industry is responsible to make sure that those that are interested, that this is an appropriate product. It's not appropriate for everybody. It really isn't. This is trading on leverage. There are high risks. It's not as risky as it used to be. Prior to ESMA, we had leverage of 200, 300, 400 to 1, and we had the old risk warning notice on the account that said that you can lose more money than you actually put in. That's not possible anymore, but it's still a product that needs to be treated with respect. So yes, there are more people interested, but I hope that people take heed and go and learn from educators that actually have their best interest at heart and actually understand the markets themselves. Go to somebody that's actually traded before. Go to somebody that understands what leverage can and can't do for you. One of the business costs that people don't think about is it's not just the spread of getting into a trade. Yes, we all talk about fixed spreads or variable spreads, whatever you're using, whichever broker offers. But one of the things to really focus on and be aware of is your rolling costs. So when you're rolling costs, we'll explain what a rolling cost means. Is if you hold a trade overnight, you're going to get charged to hold that trade. Now, some of these costs can be quite expensive, and it's a bit like a stealth tax. It's one of those charges that's not really spoken about in the headlines by the spread betting firms, surprise, surprise, but it's something that can become very expensive if you get yourself into a trade and it's a losing trade, or it might even be a profitable trade. Keep an eye on your rolling charges, because every day you will pay to keep that trade open, and that will erode into your profits. So it's an important thing to keep an eye on, and not just to be blasé going, oh well, it's a rolling charge, I'll just keep it open for another day. Just be aware how much you're paying for that. Ultimately, that's a cost for your business. In the same way that the electricity to run your PCs and the charting package that you're buying, rolling costs are a charge to your business. You need to be aware of those and make sure that you're getting the best deal. In the same way that you look for the best spreads, it's all very important. You wouldn't go into any other business not really understanding the other charges that you could be charged for. So I don't know what my rent's going to be if I'm buying a shop or I'm renting a shop. Well, that's crazy. Why would you not know that before you started? A few people looking to start businesses, almost as sole traders, or 2 or 3 of them together, looking to set up a limited company and then trade. You're right, the tax does change with that, and again, getting advice before you do that, because from a spread betting point of view, yes, it's tax free. How do they treat it from a corporate tax, corporation tax point of view? If you've got employees, then are they on a PAYE? Are they consultants to you? So it's one of those that we do have people that come in and suggest that maybe they'll do this. But again, I feel that sometimes they're not fully aware of what the tax implications could be.
My name's Andrew Wilson. I'm a chartered accountant, have been for about 20 years. I am now a finance director of a company with just nigh on 400 staff. Obviously I've worked with you for many years, Jason. Was your accountant for quite a few years as well. I have some insight into the tax side of trading. I think Stuart made the point earlier, especially with trading, which is people generally take the view of, oh well, I don't need to worry about it. It's just a bit of gambling, and if I lose, I lose. If I win, I win. I don't need to declare it. And I think that is entirely the wrong way to start. What effectively is a business? If you are earning money, and ultimately if you are losing money as well, you do need to consider the tax side of this. Ultimately, it's about finances and it's money, and what people get wrong is they just don't source the right information at the start. You have to, I think the message here that we're all sitting around is that just get the right advice. From day one, get the right advice, do your research, and then you can never be caught out. Then you're not on the back foot, you're not spending money that isn't yours, and you're not losing money, hopefully, that isn't yours either. What causes confusion for people, and why do people, I think the reason people do not want to deal with the tax side of trading is because they're so involved in trading, and that's all they really care about. There are two options. Either you have capital gains tax or you have income tax. That is the two ways that you are going to be taxed on trading. Long-term investments are always considered speculation, and it's always considered capital. That is ultimately the way it goes for trading on a day-to-day basis as well. But what we're finding over time is that income tax is playing a part as well. And we were talking earlier about limited companies and setting up limited companies and people being interested in that. As it stands, a capital gains tax is taxed entirely differently to income tax. You need to know which side of the fence you fall on. So why don't we talk about capital gains tax is taxable if you are a lower rate taxpayer. So if you earn less than £50,000, that includes your personal allowance of 12.5, it is taxable at 10%. Anything over the 50,000 is taxable at 20%. You also get £12,000 of a capital gains tax allowance. So you can have a profit of £12,000 before you get taxed anything. On income tax, that's not the case. So anything below if you're a lower rate taxpayer, so again below 50,000, you would be taxed at 20%. Above 50,000, you would be taxed at 40. So you can see it's double. Plus, you also don't get that capital gains tax £12,000 allowance. So if you get this wrong, it can have quite dramatic effects on the amount of tax that is due. The way the revenue see it is short-term transactions that cannot be classed as investments are still considered in the ballpark of gambling or speculation. Everyone's an individual. I think if you were to go and visit a tax specialist, what would happen is you would sit down and you would go through your specific setup, how you would go through the badges of trade. So I've got a few badges of trade here. So they would speak to you about if it's a profit-seeking motive. Well, yes, of course. Why does anyone trade? Because you want to make some money. The nature of the asset. If it's a systematic and repeated transactions, well, again, to a certain extent, that's going to be the case here. And also the amount of time between purchasing and selling. And if you think about it, an investment, a long-term investment, if you were to buy shares in a business, an investment and something that is classed as capital gains, you would hold them for years. You would get the dividends, the rest of it. Trading Forex or trading shares over a very short period of time, there is a justification that could be considered trading. The revenue don't really like it for exactly the reason Stuart said earlier, which is if there's a reason 90% of people lose 90% of their money. This isn't easy. This isn't an easy business to go into and be successful in. So there's lots of people that make losses. What the revenue aren't mad about is people saying, well, I was trading and therefore I can offset that loss against other income earned. That's why it's actually relatively difficult to prove that you are trading, in their terms trading, not trading in the terms of actually doing it on a day-to-day basis. Well, I think the examples that Stuart said earlier is when you have people making huge amounts of money, the revenue become much more interesting. So for capital gains, if the example we had earlier was if you were earning, let's say £20,000, and you already earned £50,000 from salaried income, £20,000, if it's capital gains, £12,000 would be taken off of that for your capital gains allowance, and you would have capital gains tax at 20% of the 20,000, which would be £1,600. For income tax, it would be 40% of the 20,000, but no deduction. So that's £8,000. You can see that's £6,400. That's only on £20,000. If you start talking about tens of thousands, hundreds of thousands of pounds, suddenly those figures become much, much bigger. As an individual that opens a spread betting account, it is considered gambling. It is considered, there is no tax on it. But equally, if you think about professional poker players, if you're doing that all of the time, that becomes a trade. And so there's you have to understand where it goes from a little bit of, on a Saturday morning, betting on the football as such, to actually you're doing this every day and you're doing it over you're spending a huge amount of your time doing it. That's when you need to sit with a tax specialist and find that and assess all of that.
Yeah. Okay.
As a sole trader, the starting position is that it is an investment. It is a capital gain position. But again, it depends on the amount of time and what you're doing. They won't only look at the badges of trade. What they will do is look at what you are physically doing on a day-to-day basis. And I think that is where everyone is an individual. You have to sit with your tax specialist and sit down in the morning and say, okay, what are you doing every day and how does this work? The fact that you spend 3 hours a month or 30 hours a week does play a part. It's not one of the badges of trade. It's not something the revenue on its own would stand there and say is a definitive factor, but it plays a part. But this is where it's quite contentious. This is where it's always different. You can't say, well, actually, you know what, I'm spending more time doing my day job than I am doing trading, because actually, if you are consistently at the charts every day, there is an argument there that you're trading. Could the revenue ever argue that? Yes, they could. Could you argue against it? 100%. Limited company is an interesting one. I mean, I think what would be the difference with a limited company is if you have staff. If you had staff and there were more, and it was more than just yourself trading, that points you down the line of you have a trade, you have a business in that way, and therefore that would be taxed as income tax individually, or it would be taxed corporation tax to a limited company. But again, there's an argument. So HMRC do not really like awarding people a trading status because it allows you to offset your losses against other income. So if you had earned income elsewhere and you lost £10,000 trading, if you were considered, I need to move away from trading. I need to say buying and selling Forex or shares, then you could offset losses against other income, your earned income, and the revenue aren't mad about that because so many people lose money. If anyone is thinking about starting to trade and looking to go live, I think the best idea would be to sit around the table with a tax specialist and take your trading plan. Explain exactly what you do on a day-to-day basis and let the tax expert give you advice about the tax implications of doing it before you start. As Stuart said, 100% in any business you have to hold on to all of your financial data. It's imperative you do that in this business. We live in a world at the moment, especially with business, where convenience is considered top. Everyone wants to make it as easy as possible for themselves. This isn't easy. This isn't straightforward. What you do need to get is the advice, and I think that's the message of us getting together today, really.
All right. So the general consensus is: listen, you want to be able to trade professionally, okay? Whether that's part-time or full-time. The thing is this: we live in a world where everything is very, very accessible very quickly. We can set up meetings. We don't have to go and do long travels anymore. So what I would advise is set up a meeting with your accountant. If you haven't got an accountant, many accountants give free consultations for the first hour or 2 hours. If you haven't got a broker, go and get that set up and bring them into the meeting. Again, If you haven't got a solicitor, you can even bring a solicitor into the meeting. You can host this meeting online via a Zoom call or a Skype call and really go through with your trade plan what it is that you're looking to achieve, what's best for you. They will advise you in terms of what you need to bear in mind, short-term and long-term plans. And there's really no need not to do this. There's no excuse not to do this. If you're starting a business, any other business, you would do this. So why not take advantage of the free consultations out there or the very, very cheap rates that you can get from accountants and solicitors and brokers. Specifically, if you're introducing that partnership dynamic to your new business, they're going to be more than willing to help you out and advise you. So before we go, I want to touch on something that really came to light when I was in Las Vegas with a 7-figure trader. The guy was earning multi-7 figures per year income trading, and he came to me and said, I've struggled with my own personal finance, right? And I struggle with my business finance, because just because you're a trader and you're going into a business in trading, it doesn't mean that you're going to be knowledgeable when it comes to money and finance. So what I would advise is this. Whatever business you're starting up, even if it's trading business or any other business, set up some sub accounts in that business. Have your primary banking account and then have a tax account which automatically deducts once a quarter or once biannually or even annually if you have to, but it deducts those profits automatically. And always err on the side of caution. So I would always go for 30%. Yours is going to depend what your country dictates or what your laws are. But have a tax account that automatically deducts the money from the primary account. The second account you want to have is your operating costs. So have some operating costs. That might be your broker, your feed subscription, your data subscription, your trading platform. You might pay for your broadband. Any kind of subscription software operating costs should be debited from that account. And obviously when you deposit the money into your account or you take into your trading account, split that out. And the next account you want to have is just a profit account. You could just set up an account that's just for profit, and at the end of the year you just have that account there and you know what was profit and you don't have to pay tax on it because that's already taken care of. If you're a limited company, you might have to pay corporation tax and that will be added to your tax account. But what I'm getting at here is if you have these sub accounts, it's going to stop you from having to trail through all of your trades and trying to define what one was a loss, what one was profit, and what was taxable and what wasn't. So hopefully this video has given you a well-rounded insight from all different angles so that you can now go and approach with a level-headed mindset and set your trading business up for success. So any questions or comments, comment below and I'll happily answer the questions where I can. Remember, this isn't tax advice or financial advice in any way. This is purely to raise your awareness because most people go into trading without knowing the numbers, and as the guys said, you're going to come unstuck doing that. So you wouldn't do it in any other business, don't do it in your trading business. So hope you enjoyed that, take care, and I'll see you in the next video.